Hey, this is Cheryl from Hassan Finance, just dropping by really quickly to talk about some inquiries I've had recently regarding fixed rates and what to do. So basically, what's a fixed rate home loan? A fixed rate is basically you fix the interest rate and therefore the repayment for a fixed period of time. Generally, you fix these interest rates in terms of like 1 year up to 5 years. So you really choose how long you want to fix that for. Why would someone fix their rate? Well, honestly, at this moment, it's just reassurance, it's peace of mind so that you know how much you need to budget for each month when you're doing your home loan repayment budget. There's nothing worse than budgeting for a certain amount. You have a fixed amount of income and suddenly rates go up and then you have to find that money and reorganize your budget. So by fixing it, you've just got yourself certainty of knowing what that repayment's going to be, for how long that repayment's going to be for, and then it gives you the peace of mind. Few things to be aware of when fixing rates. Sometimes there's limits of how much you can make in additional repayments each year. It depends on which banks you go to. So if you know that you're going to have a large amount of money come in and you wanted to put that on your home loan, know that some of these banks will say it's 10,000, 20,000, whatever, but there is a limit to how much extra you can put in. You can put it in, but what happens is they do what's called an interest rate adjustment, and they'll actually charge you extra for putting that money in. So if you don't have that scenario coming up, then rest assured you'll be fine. You can stick as much in as whatever the maximum is with the bank that you go with, that you're fixing with. In regards to flexibility, if you want to refinance or sell, if you break the rate, there could be a break rate cost. Now, this is calculated at the time of breaking the rate, and sometimes there's actually no cost. So, for instance, if you fixed in a rate at 6.0%, and the basic variable rate at the time of you breaking it is 6.5%, then it's likely you are not going to be charged. And the reason for that is the bank can lend your money out at a higher interest rate and make more money. The time when it does apply is if you break it at a high rate and the actual variable rate is a lot lower. Therefore, there is a cost to the bank for you to break that rate, and that will be worked out at the time. It's not something we can work out it's something the bank has to work out at the time, and they'll advise you what that charge will be. So it's important to remember that. You also may not have the flexibility that you have at the moment with a variable rate. However, that flexibility has the issues with rates go up, rates go down, whatever happens, it's going to affect your variable rate. You're not going to be sure of your repayments, which is the whole reason why you would go and fix your rate. So your repayment might actually be a little higher compared to the current variable rate right now, but then again, you're trading that for stability and certainty. So the idea is if you fix it now at a slightly higher interest rate, and you think in terms of if the variable rate goes up 2 or 3 times in the next 12 months, you may actually end up at the same rate as the variable rate. But for the 2-year period, you rest assured, or 5-year period, or whatever period you choose, that rate will stay the same. So it's really not about getting lower repayments or a great offer on rates at this point in time. It can be sometimes, but it's not at the moment. It's really, again, it's about peace of mind. So when we quote on a fixed rate at the time, at the day that we quote it, that's the rate that applies. However, if that rate changes between the time that your variation or your loan settles, then that will be the rate that will apply, not the rate that was quoted. Now, to avoid this, you can do what's called a rate lock. So you can lock in the fixed rate that's been quoted to you. It's generally a percentage of the loan amount. It can go into the hundreds of dollars. And so sometimes it's a bit of a, 50%, should I do it, should I do it, should I not do it, given that the cost is so high. But if we're expecting a succession of rate changes, sometimes it's better to lock it in if it's going to take a few weeks for that loan to settle. If it's a variation on your current loan, generally you can do it straight away. So there's no need to consider that rate lock as an option. So what fixed rate period should you choose? I guess it's really up to you. Generally speaking, I say 2 years is a fairly stable period. You pretty much know what's going to happen in that short to long term of 2 years. Anything beyond that, We have no idea. We have no crystal ball. In fact, we don't really have a crystal ball at the moment with the way world events are. So it's hard to choose. But if you locked it in for 2 years and maybe you pay slightly higher for 6 months of that 2 years because the rates went down, that is the trade-off. That's the trade-off of having that surety of knowing how much your repayment's going to be. The only time when I've ever suggested to go beyond 2 years is when the rates were around 1.99 and 2%, and I was just lock it in for as long as you can. 4 to 5 years is awesome. Who wouldn't want that rate? Regardless if the rate went down to 1.5, it wouldn't matter. That was an awesome rate to lock it in at. At the moment, we're dealing with a different situation. So that's why I suggest 2 years is pretty good. You can also split your loan. You can fix some of it and have some as variable, so you can take a bet on each side which way you want to go. That's something we can talk about, and we can talk about why you want to do that. Perhaps you've got some money sitting around in offset, like $50,000. Maybe you want to split off 100K in variable so that that 50,000 offsets the variable portion. That makes sense to have some that's variable and some that's fixed. So we can also just talk about your personal situation and what best suits you at the time. So really, there's no one size fits all answer here. There's no this is what you should definitely do type of advice. It's basically have a chat with your partner or with yourself and make a decision on what you want to do. Have a chat with me and let's run it past a few banks and see what interest rates are on offer for the period of time you want to fix it for, and then I can quote you repayments and you can make a decision based on all the information. I can't decide it for you because, again, I don't have a crystal ball, but I really think for surety and for peace of mind, it's not a bad idea at the moment to fix your loan. So that's my thoughts. Give me a call, book in via my Calendly link, or send me an email and I'm happy to have a look at your situation and see how I can assist you. Have a great day. I hope this has been really helpful for you.